Good morning, everyone. Microphone check, screen check. Looks like everything is working correctly here. Good. Alright, hang on 1 second here. Alright. Welcome. Good morning. Welcome to Friday. Welcome to maybe a little bit of a funky day. There's definitely some weirdness going on with the volume split and all that other fun stuff, but either way, before we jump into all of that, good morning, SSFTG family. I hope you all had a chance to rest up, get ready for the day ahead and all that fun stuff. As per the usual, make sure to read through the morning prep PDF on the right side of the screen. Very important to go through and understand everything that is inside there. Just a quick note for you all as well before we jump on in today. If you're watching on the YouTube side of things, the stream does have between a 5 and 30 second delay, depending on where you're logging in from, which will definitely impact the timeliness of what I may be talking about at any given moment. And then, of course, also, I just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you have several different options to check out if you're looking to further your trading education and career. The easiest way to start out is to join as a member on YouTube. It gets you in the chat room and a little bit more behind the scenes and what's going on, or if you want more information on how we do everything in our trading approach with over 19 plus hours of video course material and all that fun stuff, swing over to the main page at ssftg.com. So whether you're here for the very first time or you're one of the VIP vets over on the dedicated stream, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's take a look at some news, take a look at some charts, see what's all going on for today. Don't forget to grab your morning DP levels. Those are posted for you this morning in the Major 7. NASDAQ, S&P Gold, Crude, Euro, Bitcoin, and Ethereum. It's a race every time. A little calmer this time, though. As far as the news calendar is concerned, the only news that we really had today was at 8:30. Now, I say that kind of sparingly because realistically we do have at 12 o'clock the WASDE report. Now, for those of you who don't know what the WASDE report, that is a monstrous agricultural announcement. Huge agricultural announcement. Like, it sends the markets crazy. If you want to see some really fun movement, watch soybeans or something during 12 o'clock WASDE reports. It goes nuts. Now, it really only affects the agricultural side of things, so it has no impact on really anything that we're going to be trading per se. But for you agricultural traders out there, today is a big day. This is a day that a lot of traders wait an entire month for, just for this day alone. So huge announcements. Aside from that, there's not really anything else going on. We've got some of the normal stuff: U.S. Baker Hughes oil rig count, CFTC speculative net positions, all the basics. So let's take a look at what's going on. Starting off on the S&P. Sheesh. The way that the S&P is kind of hovering around here, again, the big thing that we were looking at is where is this major cycle? And we kind of figured out, wave 1, wave 2, wave 3, wave 4, and then wave 5, which fit perfectly. From there, we've had kind of this A to B to C to D sort of correction mentality, and it went a little bit further up again. After that went a little bit further, this was really the bull's attempt. My tool's not running, hold on. This was really the bull's attempt to try to get something going. Oh, did you get it? Awesome. What, it just registered what you meant by that, when you said got it. What was it? What was the problem? Let me know. Was it really? Okay. See, that's not the first time, and that's how I knew about that, because, man alive, it's one of those stupid things you realize, like, really? All of that? And it was, oh, yeah, I know. I feel you. I've been there. Awesome. I'm glad to see it worked. So, as far as the ABCD corrective nature that we've got going on here, realistically, this looked like a rolling continuation that the bulls were going to try to keep it going. And then it failed. Now, when it failed, that caused a bit of problems, right? A lot of bulls are going to be thinking, oh, wait, what? Why? Why did it fail? A lot of traders are going to be stuck on the wrong side of things. Maybe they bought too high. Very typically, when you have a persistent trend that's been going on, we know that the POC was way up in the sky, and we know that they were defending it. So, without a doubt, we know that they were buyers. It's hard to disprove that one. That's kind of a fact. So, given the fact that there were buyers there, and, well, it never made it to much more than a quick new high and then reversed back down, that gives us a very obvious inclination of what these traders were thinking. These traders weren't thinking, you know, buy here and hold to the moon. They were thinking buy here, go up to the highs. And they started exiting as soon as it even got close. If you look at the last consolidation ahead of the highs, that's where all of the exiting began. And when it finally made that last pop, that was it. That was all of them. They're like, yes, get me out. And they jumped ship. Now, if buyers weren't paying attention to that, they got steamrolled when it came back to break even, and they were given one chance to get out of break even before it slammed down again. Now, you'll notice a little bit later, they were given one more chance. And that one more chance is very important because what happened after was a total lack of breakdown. That's a really big problem if the bulls get a break back above the highs. The reason that's a big problem is because the sellers feel like they have this thing by the throat, and there's nothing that can stop them. And that feeling of invincibility, if we drag this a little bit further forward, we'll see reflected in volume. Come on. Yeah, there we go. That feeling of invincibility was right around that POC area, and it very quickly diminished when it popped back up. Now, when it starts driving down, it's like, okay, well, wait a minute. All those bulls just jump ship. So these sellers are feeling amazing. Right, everything is right with the world. Everything's great. Even this small little pullback, totally fine. Continues down. Little pullback, totally fine. Wait. Little okay. Little bigger pullback, that's fine. Okay, little more of a pullback now. You can feel they're under pressure. They haven't gotten the new low, which is the proof. That's what needs to happen. That's like the period at the end of the sentence. And they didn't get it. We have everything set up for the sellers to master blast this thing through the floor, including it being a rollover Friday with split volume. But they couldn't get a new low yet. Very important to note if we start getting above those 45-20 quarters with some conviction, preferably above the 29s or 30s. I mean, the sellers could be massively underwater, and then we're looking at a huge rally back to the highs on a squeeze. That could be fun. Over on gold, and actually, let me take a second to look at the NASDAQ because the focus is going to be the S&P today. I wanted to do a little bit more on the S&P. It's my birthday this weekend. I wanted to have a little more fun and have some scalping and some fun on a funky kind of Friday. Anyway, we've got the NASDAQ, which is with a really, really nice rotation to the upside in very similar situation. Actually, identical. In fact, almost a bit more bullish over here because they did trap the low. So they have that little kind of inside pip trap that we always joke about, the pick your pocket trap. They got it, and now they're rotating back to the upside. If we break above the highs on the NASDAQ, on the S&P, etc., man, it's showtime. We'll see. Over on gold, big strong move from the top down, and if we're looking at the overall consolidation that's taking place now, from the high to the, that was the low over here. Man, they still haven't fixed the data? Come on, it's killing me. All right, well, we've got the POC, which originally arranged itself at 1800, give or take. I mean, it must not have changed too much with where this went. So that location, again, this is where sellers really want to see that break down. They push back up, they hit the break evens, like, okay, game time, let's go. Oh, what do you mean we didn't break a new low? What? Why? How did we not break a new low? So when it reverses back up, sellers are still thinking, okay, we got another shot. My risk is small here. I can re-up into the move, maybe even grab some smaller targets along the way, you know. But once that breaks above, it's basically invalidating everybody now. So if we get another higher low and it churns higher, that's the third higher low in the sequence, which is almost always what's needed before a trend reversal. And we're also shifting above the POC. There's a lot of stuff. If we migrate this a little bit further forward and encompass all of the top to bottom, we can see that the POC is at 17,999. Sorry, 17 at 99 even. And that's the zone of interest that the market's going to have to either break above or fail underneath. Right now, it looks like it's starting to fail underneath. Really not going to have any proof until they break a new low, though, to be totally honest. Now, in the short term, from the bottom to the top, yeah, I was going to say, this could also just be a break-even run. So these earlier shorts, this is the POC from the bottom of the move to the top of the move. Sellers were attempting to build in for continuation. Could you blame them? They failed. Rotated back up. They got at a break even. Looked like it was going to go back down. Oh, re-enter. Oh, crap. Get back out. Get back out. Anybody who's kind of stuck through all of that, well, they're back again. So, I mean, this is the zone of interest for the earlier sellers who got stuck to exit at break even. And this is also the launching point where if we start rotating back above the 99s, that we could see this go all the way back up to 1836.9, all the way up to the highs. Or at least a 2DP move up to 1827. A lot of potential. How's it going, Steven? Good morning, good morning. Pavel, good morning. Everybody else so far, welcome, welcome. We've got crude oil, which, you know, it looks like a copy-paste of all the other markets. I feel like I'm analyzing the same chart over and over and over again here. But if we go from the bottom all the way up to the top, I guess it's good practice. Oh, right, yeah, the volume's broken. I can't ever trust NinjaTrader. We've got the volume, there we go. The POC demonstrating at 68.75. Now, this is a relatively important zone of interest because realistically, look what's taken place. We've had this strong rally to the upside, but has it really done anything? I mean, look at the confirmed swings. Confirmed swing low. I mean, none of these are really any kind of confirmed swing until here. And then we get this guy there. And this, after the gap over the weekend, never completed, right? It never rolled up to a new high. So this dip down never broke a confirmed swing. It created another one and went up to another new high. So, I mean, really, until we break this high, we don't have anything. We've got nothing. That's all we have to work with. All the confirmed swings are down here, which, by the way, are still intact. So the bulls still own it. They have everything. They own the whole thing, all of it. And now that we're creeping our way back above the POC, it's pretty obvious, right? I mean, we had that attempted move to the downside. The sellers look like they were trying to get it to go. And, man, they're having a really hard time. Let's see where the volume is now if we rotate this all the way to the front. Mm-hmm. 68.75 looks pretty interesting. Mm-hmm. Let's see what it fits. 2-to-1? Man. Where does the entry have to be to fit a 2-to-1? Sorry, I sound like a teenager. Where is the entry? We've got the... back to settlement? Man, that's so far down. I mean, if it pulls back to settlement... Oh, man, that's a toughie. I think I would rather approach it from this perspective and say, you know, if I'm going to enter, I would rather try to fit it like this, just to try to get my entry a little bit higher up. Looking from a structural perspective, at least. If we draw this across from resistance, it would make sense to see a bounce back, right? So seeing it rotate back up, or even better, would be seeing it do something like this. Break above, not quite reach those objectives, and then start churning back to the downside again for that re-up. That would be, like, the perfect. For those of you who are addicted to TikTok. Good soup. Really good spot right there. 68.75. It's infecting my life. We've got the euro, which is pulling back, and I mean, really, the way that this is kind of getting stuck here, we've kind of broken out of the structure, right? But as we know with all of these types of channels, when you break that structure, the market usually wants to rotate back. So if we look at this in overall construct, why Why would it have broken structure? Well, we already talked about this multiple times. It was kind of peeking its head above. Looked like it was even creating that sharper rally, remember? They missed the top of that one, but we have an overshoot. And when you have an overshoot at the top of a channel, usually the market likes equalizing by about that distance. And you'll notice where the majority of that support came in is about the same distance that the market blew out of the top. So we're finding supportive buyers here because they know that that's a value zone of interest. If we go backward a little bit, we're also, you know, I mean, that offers up a fairly decent risk, considering that the reward, even at inside, this would easily be a 3-to-1. So there's a lot of really good supportiveness coming in here. Now, let's see what the POC looks like from the top all the way down to the bottom first. Probably going to be bugged, yep. Of course. Okay, so 18,430 is the POC, but I mean, my data's bugged, so I don't know if that's the impulse or not, so I'm just going to take the whole thing. All right, 1.18245. I mean, this is the spot. It's hard to get much better than this. 3-to-1 fits on the inside. I like it for a continuation. Thank you. Jeez. Is this the S&P? In terms of the upside continuation, I like this for a higher low, so I do have to assume that this is a low probability trade, which is exactly what this is. But that's okay, because the target is all the way up to 18,920s or so. Which means that you're looking at about a 3-to-1. The likelihood of success on this trade is strictly speaking, 27 to 30%. So with a 27 to 30% likelihood at a 3-to-1, that math, that's totally fine with me. Nice spot. Not worth much more than 1, though. We'll see what they want to do. Over on Bitcoin, Bitcoin had that gigantic slide to the downside, and since then hasn't really done anything. Just kind of finding some balance. Obviously, if there's going to be a POC, it's going to be hovering smack in the middle of it. As we've been talking about for a very long time, I'm looking for another pulse to the downside. I'm also looking for potential shelter markets that people will utilize to get away from that drop to the downside, or to minimize that drop to the downside, which is what we've been seeing with things like Solana and some of these other markets where Bitcoin drops 18%, but it's up 30%. Or, you know, Shiba is another example where it initially drops 30%, Bitcoin drops, you know, about 18%. It's still hovering around there, right? It hasn't changed much. Oh, that's not going to help. Percent. Yeah, 17%. Whereas Shiba coin and other coins like it had that really aggressive sharp bounce down 30%, and they recouped all of it and then went up a little bit. So people are obviously looking for shelter markets away from Bitcoin and Ethereum because they're expecting something to happen. Now, is that a logical thing? Realistically, if Bitcoin goes down, so do the other ones. So not really, but the nice thing about it is you can buy a lot more coins for less, I guess is one way to look at it. The important thing when you're looking for shelter markets is to find one that's proving itself first. And, you know, I don't necessarily know that we have that yet, but all right, you'll notice a slight little shift in the way that things look this morning. I've got things built around the S&P because, like we were talking about yesterday in the extended session, I believe it was the extended session, maybe it was the regular one, I remember. My birthday's this weekend, and I wanted to have a little bit of fun going into a Friday, a really awkward Friday with volume split and everything being weird as it is. I thought it'd be kind of fun to focus the S&P today and just look for potential swing opportunities on the NASDAQ like we do on all the others. So that's kind of the reason why things look different. And this would also be sort of the mentality of the last week of September that we were talking about too. So far this morning, at least, not a whole lot has been going on. Hey Ace, how's it going? We've got some bullish continuation to the upside, which, you know, they started the session off with, I mean, this would be the channel, right? And the channel held. We're just now breaking it. I mean, realistically, this is still very, very strong to the upside. If we're looking at the overall structural move, the big thing that stands out here, more than anything else on the S&P specifically, is that we've got this kind of really strong breakdown structure that lost a huge amount of momentum down at the base. So when we have that, I'm curious to see, like, where was the volume before it lost momentum, which is up at 45.12, and that's where the market is right now. That's why it's important to note these areas. We're right on top of a previous congestion zone. We can get above that. It's clear sailing up to probably 15s. I won't necessarily say 20s, but at least the 15s. But if we combine all of that information, noting that that previous POC was here at 12, make this, I don't know, 3. Doesn't have to be huge. I just need to know that it's from the previous POC. And then we can drag this a little bit further forward down to that quick, sharp new low. After that new low was made, that POC has already been shifted to the downside, where the market is attempting to get this to rotate lower, and, well, they did succeed in getting a new low, but then immediately failed back up. And you'll notice, right there, that's why this whole rally is interesting. That little pullback right there, that would very much suggest that if these were shorts and they were still at break even or had something they were trying to run, when the market ran through their break evens, they chose to exit on the next dip. I don't know why they chose to exit on the next dip. I really don't care why they exited on the next dip, but obviously they exited on the next dip, and that caused a very strong rally to follow through with the next pulse. This is a full flip in its finest, right? From the bottom all the way to the top, this is trapping every short on the planet. So the first anticipated move is going to be an L1, which is exactly what they held on to. Of course, they did it at... Let me guess. I didn't even look at the time yet. I can't see the time yet because the screen's frozen. I'm going to guess that this is like 3 in the morning. Actually, you know what? I bet the rally started at 3, so I'm going to guess this is probably closer to 4. All right, a little bit later. Let's see. Okay, it is 3. A little earlier. So, man, the Australian session had all the fun, huh? Right around 3 o'clock. Perfect timing, right? So we've got that L1 continuation rallying the market back on a full flip. Awesome. Now we're looking for more patterns. That was kind of the end of that story. Now we need to find a new one. The market's attempting to hold on to the L1 structure at the moment, 45.09 quarter. So if we get a second one in a row and we get a little more continuation, we're looking for the bulls to continue. At the moment, we have to look for the bulls to continue anyway. Look at how strong this thing is. It's ridiculous. But in the grander structure, we've also got reasons. From a volume perspective, from the top, or the bottom to the top, we've got 45.11 is the POC. Oh, that's funny. I got you, Ace. I mean, this whole area, realistically, to me, kind of looks like a higher low transition. That if there was an L6, I don't look at L6s. I don't consider L6s. But if there was an L6, this would be an L6. Okay? This definitively almost revert. I mean, right there. And then shot right back up to the upside. So, I mean, again, we've got that previous structure, which technically was still going up. We've broken. Yeah, they've had a couple legs down, but, I mean, really, the objective is still to retest the highs. We're right in the middle of the move. And I think shorts who are stuck are realizing, crap. Oh, what do we do to get out of this? Hopefully, right, you can already hear what they're saying. Hopefully, we can get the open to flush. Right? All right, well, let's look. If the open does flush, let's be prepared. If the open does flush from this perspective, where could it want to flush down to? Well, obviously, there's the previous POC. That's pretty straightforward there. But from a structural perspective, we also have shorts who are working on L1s. They broke down. Got another L1, so sellers are going to be looking for the third one. The third one fails and rotates into an L2. That's a disappointing response. We just had a video on YouTube about this. When there's a disappointing response, the market typically flatlines or reverses. Right here. Just happened this morning. I think the video was yesterday or maybe the day before. Same thing. They were expecting an L1. It didn't. They got an L2, which is still okay, but that's not what was supposed to happen. And it fails when it hits the new low and reverses. So if the market were to churn back, where is it likely to come back to? Well, it's probably going to come back to the L1. That's where all the sellers just got massacred from. So the zone of interest today, if it does flush this morning, right there. I say right there. Let me give you a price. 44.98 to 94.50. Obviously, we're very far away from that, and obviously that might not actually even happen. But, you know, if it does, and we can feel the mentality, that's going to be the big spot of interest. Somehow I like the white background because I can see the end of the L zone, which is black. Yeah. Makes it a little bit more obvious as to where I'm anchoring, at least. A lot of times, to be totally honest, a lot of times I just throw it on there because close is close enough. But you'll notice if I really need it, I'll go in and kind of precision it just to make sure. A lot of times it's just a rough measure, to be honest. And the farther out you zoom, the rougher it gets. The white screen's hell on the eyes early in the mornings. I feel ya. I'm used to the... It's not a totally black background that I use. It's like a really dark, deep navy... Looks beautiful. It's one of my favorite colors. It's like a steelish blue, dark... gorgeous to me. But I'm a big fan of color. What can I say? But it really is nice on the eyes, especially at night, you know. The white background might promote less work at night, that's for sure. Depending on where the office is, too. Or bloodshot eyes, one of the two. Looking at it, we've got 928 right around the corner. Going to be opening up with a pretty hefty gap to the upside, but still an inside gap to the upside. All of the support is going to be coming in back at 4503, 4500, obvious level of support. I mean, we already know this whole area. I mean, yeah, sure, 03, but 4498, you know. More likely, we see a short-term continuation into the open. Probably channel up into like the 1675s or so, and then start that attempt to the downside if they're going to do it. S&P, nice little bull bar there. You'd have to buy directly into the DP resistance, though, which makes it a bit difficult. But 13 up to 4... Gross. Yeah, that just doesn't fit. Side note, the NASDAQ has, on the daily, still hasn't hit an L1. Hasn't done it. So for the euro, we've got the low probability, high reward opportunity to the upside. The crude oil market is a bit of a challenge. I would prefer to see it come back to 68.46 and zoom into a faster time frame for more of a benefit. That's about it, really. The S&P and the NASDAQ are just grinding higher. 1 minute until the open. Starting to leave them behind a little bit here. All right, let's zoom out a little bit and look at the bigger picture. I mean, they already had the breach of trend over here, right? If you're looking at it from a confirmed swing standpoint, just rough. Top, bottom, top, bottom, top, bottom, top. Right? I mean, it broke right there. And now we have a higher low. Oh, boy. Right on up back to the high as we go. maybe. I would still like to see the market pull back a little bit first. 9:30 opens. We open up just above that structural support resistance back there in the 14s, 13s. Wow. Nice strong continuation rally to the upside. Jeez, this NASDAQ's going freaking crazy to the upside. Look at this spike. Lordy, lordy. I mean, to me, this looks like this is a break-even rally if I've ever seen one. This rally scares the crap out of me right now. If this were to start showing up bear bars. Now, if it breaks above the highs, that changes everything. But this kind of rally to the upside, okay. It is really nice that the POC's back there. S&P still churning back to the upside. So far, not really proving a whole lot. Aside from the continuation pulse above the highs, which, again, expected. Now we're retesting the top, and this is where things can start running away a little bit. Yeah, the thing sticks. It does. It sticks out like a needle. For now, at least. That's crazy. Now, the NASDAQ from where it was, remember, we were cycling off that higher low, and there's your good old pip trap. The pick your pocket trap right there. Bing, 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 bing. They done got pipped out right at the lows. I mean, look at that. It's disgusting. In a great way, once you see it and know how it works. They still haven't gotten back to that POC, though. Disappointing there. By that 1 to 2 ticks. Yep. Put him right in the sniper scope. Took him out. Just right there. Bullseye. Those are the nastiest ones, too, because they force traders to reevaluate, like, everything. They just got wicked out of a trade just to see it go screaming back up. Now they're at break-even, where they could re-enter again and kind of double down on the loss, and then they have to ask, then it's a psychological battle. Do they re-up on the... And it just becomes this cat-and-mouse game, and by the time they actually decide to buy it, it's usually at the top. Like right now, as an example on the NASDAQ, after it's rallying all the way up here. Right, they're like, oh man, they just took me out. They just took me out. I don't want to buy back in yet. That's, you know, not yet, not yet. Okay, now the sellers are failing. Okay, all right, let's just pull back. It doesn't pull back enough. All right, just a little bit of a pullback, just a little bit doesn't quite pull back enough. Or it does, but now it's gone so far up that you're second guessing yourself. That psychological cat and mouse game. You know, and then by the time you see this, you're like, okay, now it's finally time. You hit buy, and it's here. Right? So, I mean, maybe it works, but those traps are so nasty when they step up like that. Market returning back down a little bit, getting closer to the first 5-minute the first 5-minute mark. And, jeez. We've got the POC sitting at 1650 at the moment. for the S&P. Funny, that's and we all have. You know, that's how we can identify what happened there. I mean, we know what happened there. Because we've all been there. That's welcome to the trial and error of being a trader, I guess. Nice little pullback here on the S&P. A lot of support, likely 45.11 or so, but I mean, again, I would really like to see this trap out the lows. I think a lot of traders are trying to figure out, where do I trail my stop? Where do I put my stop? Where should it go? Where should it go? It should go at 8.25, right? Right? That's where the stop should go? Yeah, it should. That's right. That's exactly where it should go. Perfect. Yes. That's the area that I like, where I believe a lot of traders will believe it'll be a valid attempt from the sellers. That is nothing more than the false attempt down. Sellers that are getting squeezed, getting out of break even. Got my 2 of the majority of the contracts out on the last one. I'll take a choppy on a Friday. Enjoy. Yeah, have a great one. Enjoy the weekend. So far, not much happening. Got a bit of a downward channel progressing its way lower off of the top. These have to be a little thinner. It's a bit extreme. Save, default, yes, there we go. Market is pulling back to the POC, 45.11. A lot of traders will have their stops underneath this 8.25 area, which I don't believe at all. But we have to maintain a very obvious perspective here, because realistically the risk has to be based off of the swing down there. So it doesn't fit a 3-to-1. It doesn't fit a 2-to-1. So therefore it can only be a scalp. Again, I'm looking at this now. The S&P doesn't have it so much. The Nasdaq has it very, very much like. Wait a minute, is this a break-even rally? Are traders stuck at the top? What's happening here? If they can continue up and reward the greedy traders, then it's FOMO time. All them stops are right down there. Grab them. 8.25. You know that ice cream guy? That vanilla. Sweetness. God, really? S&P, I know you're vindictive in your soul of soul, hearts of hearts. I know you're vindictive. Those stops are right there. First 5-minute bar with a big nasty doji and a pullback. From a structural perspective on the 5-minute, it might actually make more sense to offset. Let me reevaluate here and see where this lines up on the 2000. That would be a fantastic dive. Right down there near those lows. Even, I mean, I still like this area as at least a potential scalp, but I'm not going to risk into it as aggressively because the zone down here is much more interesting. If it does want to bounce, then cool. I'll still take the bounce. That's fine, but I would rather see the risk come in a bit further down at previous structure, and previous structure starts stepping up in like the 03s. So really, we have to ask ourselves, are these two separate trades? Which I think they are. POC at 45.11 is attempting to trip to the downside, but if we look at the top down, we can also see that buyers are attempting to base a POC at 45.10. I wanted 8-quarter. And now they're already up at my target. Gotcha. Okay. All right. Well, I have to cancel now. Jeez. That's frustrating. That's really frustrating. Now, maybe we can get a little bit more of a vindictive move that takes place here, because realistically, we still have a very nice down channel that's going on. But because I missed the initial dip, when I'm trying to buy the dip, right, when I'm trying to BTFD in, I'm trying to find a precise entry point, right? Now, I'm trying to look through the scope and figure out where do I need to aim. And if I'm wrong, I'm not going to give it a whole lot of room because the target's not that big, you know, in the sense of the bullseye area. So from this perspective, if I want to be a buyer down here, I know that, yeah, I can buy down in that previous POC. But I've got a lot better probability if I'm buying down here or even a little bit lower, knowing that my risk is down here. That fits my probability. It gets everything in alignment. And because it came down into that zone, missed my entry by 2 ticks, and then went up to where my target was, I missed it. There's nothing I can do about it. Now I'm going to have to wait for something a bit more obvious. The NASDAQ, on the other hand, is still really holding on to these highs. This thing's crazy. Got more bullish continuation on the NASDAQ, potentially up to like the 670s. POC at 45.20 on the S&P. This NASDAQ kind of looks like it's poised to break out of the highs here. This little pennant formation that they've got going on. Keep in mind, when you're dealing with a small pattern like this, the risk is very small because the risk is underneath the pattern. So you've got to be looking for a very large reward and make sure that that reward fits. So as an example, if I were to buy on a close of a candle and I were to put my stop underneath the lows, what does that even fit? Like, a 2-to-1 is still above the highs. The only thing that would fit would be a scalp, and that's still above the short-term high. So it just... this pennant's just too far up. Now, if we can get a false break low in a twin reversal or something like that, that shows that they want to try to creep higher, maybe a different story. Side note, POC just shifted. Nice dive to the downside. If we're looking at it from a double value down, that would be at 2.5. And that is right back into alignment of the previous structure. Picturesque. Nice continuation to the downside so far, though. Now, while the market is persisting to the downside towards its value area, we can also look at other things that we can combine with this value to give us an idea of what would be normal. And right now, the last pullback was from there to there. So if we combine that from the highs, that parks it right down in the base. I mean, that's the perfect spot. It's right there. That is value. Short term and medium term even. You scalped off the POC 4511, exited both. Great work. Nice job. NASDAQ trying to get that false break. We've got the POC at 657.7. Looking on the S&P, we've got the POC, which the market is currently closing underneath. I'm going to stay away from the long. We're starting to see some warning signs here. We've got candle gapping to the downside. And an active, another candle gap, which if it were to go down and fill me at that time, is still wide open. You're kind of catching a falling knife. Even though there is a lot of support there, I'm going to have to wait for a secondary bounce. There's a little too much resistance pressuring this right now. The NASDAQ false break underneath the low, trying to churn higher. If I had to look for anything on the NASDAQ, I would be more interested in 648.75s. But with a more restrictive stop placement. For an L1 continuation. That allows a 2-to-1 because I already know the probability isn't great. But the probability of success in this case, we're looking at about 37 to 38% likelihood, which with a 2-to-1 and potentially a little bit more, that's okay. It fits. It's not perfect, but it fits. Those Rotten Peckers came, what, a tick away from my entry again, huh? Okay. S&P sellers could potentially be looking to try to short into 475 with a trigger to the downside. I would rather look for... I don't like that entry point, but if they can trigger short and then pulse back, that would look better. From the 5-minute perspective, we still have open candle gapping, although it has narrowed in a little bit. Downside candle gaps... the first one has already been filled, so that one's done. The second one is still being formed, but has some pretty big targets down right now. Don't I have another? Yeah, there you are. So open candle gap objective to the downside is 98.75. Candle gap objective. Whoa, near the dark. All right, I've got to cancel my order on the NASDAQ too. Absolutely cruel what has happened this morning. Criminally cruel. Oh, come on, man, really? Skip my entry on the S&P. Skip the... Oh, rotten buggers, okay. Contract rollover, when we're looking at the volume, the MNQ September contract's at 105,000. Now the December contract's at 120,000. So before the morning started, the September contract had more volume. Now that it has rolled over, Monday, for sure, we're going to be trading the December contract. Today, I'm going to continue trading the September contract like normal until I'm done with the day. Realistically, I don't have a reason not to, so. We're down in the zone of interest. But technically now, we do have volume which has rolled over on the NASDAQ to the December contract. And the S&P as well to the December contract. The S&P by 2,000 contracts. All right, nobody showing up to the first party, but the secondary value, 4,500. Nice work, Steven. Great job. Getting down into the 44.98s. We are completing a lot of downside objectives here. And this is that morning flush, right? This is that dip that we were talking about. If we can find some supportive, supportiveness coming out of the 44.98s, we could be looking for that strong pulse back to the upside. Because remember, this is a retest of the POC in a major zone of interest. No bull bar to be had there. Well, I mean, kind of, I guess. 44.98 is the previous zone of interest. The big one. The first zone of interest just axed through like it was non-existent. A little more sensitive to this one around. 98 catching a bit of a bounce. From the POC perspective on the 5-minute, we have more open candle gapping to the downside. So we did just fill the first candle gap objective, but just as soon as that was filled, we opened another one. And that has downside objectives here at 92.50. They just keep on trucking. A little bit more sensitive to that 44.98 area, huh? Okay. Well, I'm willing to see if they want to come back now that we've got a bit of extra proof. We're in the value zone. I like the bounce. It fits. Whoa. How did that even happen? What? How did that shift? What? How did that shift? It wasn't even there. Now, wait a minute. Whoa, 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 whoa. Rewind the effing tape a second here. That POC was not there a second ago. And it moved there when the market wasn't there. Now, wait a minute. Something's a little funky here. Okay. Oh, now they're trading back to it. Yeah. Mine eyes don't deceive. I saw you. we're going into 10 o'clock. Given the nature of the day, and we're kind of having a little bit more fun today anyway. Like I said, my birthday is this weekend, so we're having a little bit more fun. Instead of doing an extended session and kind of soloing things out, I'm just going to keep things going and roll it in until we finish up. So. Yeah, magic. That was a bit funky how that happened there. Now, too strong of a bear bar here, and that's going to make me a little bit more hesitant. Speaking of, it's an incredibly strong bear bar. All right. That will be a potential trap in the sense that sellers will be trying to sell for a continuation very far down, and that's a really bad spot for them to be selling into. Now, it's very early, but looking at the 5-minute chart, we're getting the POC, which magically shifted to the downside. I'm not exactly sure how that happened, but that kind of shifts things a little bit. Remember, we're already completing some candle gap objectives to the downside. We have one more, which is still open, down to 92.50. It looks like they might open it up a little bit more. Realistically, from from a 5-minute perspective, 2/4 is a zone of interest. Now, if it hits 2/4 and immediately backs off, then I'm looking. I'm going to have to 4,500 MIT. That's the only way that that's going to actually work. Otherwise, it could go 1/4. So small little gap fill attempt, but likely that sellers reject the first attempt around. Market just hovering, not really doing much yet. Some resistance coming off the 2/4. If they hold the 2/4 and the objectives back to POC 4,500 and then maybe down to a new low, if they go a little bit further up, then there's some opportunities to sell a little bit. But is the ES contract rollover? Yes, technically the volume has now shifted on the S&P to the December contract. Thanks, Stephen. I appreciate it. My kids wanted to bring me bowling. Super excited. I haven't gone bowling in years. Which, I know how this is going to work, right? I'm going to come back on Monday and my shoulder and my arm are going to be dead tired. Not built like I was. It's funny how quickly age catches up sometimes. Hitting the target, filling the target, out. Nice. Good little continuation pulse to the downside. Relatively straightforward. Unfortunately, I had to miss out on the majority of that slide down, but at least the sellers have something to kind of push back on. Again, the reason why I'm still willing to sell into this is primarily because of the fact that this isn't really that good of an attempt from the bulls. And if the bulls are going to take it, they've got to trigger above this bull bar, which they haven't. So as long as that doesn't happen, it's okay. And they didn't. Now it's an inside bear bar. Sellers might try to take it back below. The POC right underneath it doesn't help. And the fact that that POC just magically showed up out of nowhere makes me question things a little bit. So that might be due to the fact that we have contract rollover, right? That could be something that I've just never seen before. I mean, that I'd like to think that I've seen everything, but I mean, the market proves me wrong every day. You learn something new every day, and maybe that's just due to the contract rollover, late reporting, things being reported late because it's the end of the, it's the end of the contract. I don't know. But that POC shift down makes me think it might be more beneficial to shift and swap over to the December contract now. Normally, I wouldn't shift in the middle of a session. That's not something that I would normally do, but I think in this case, it makes sense. So let's see here. We've got, again, 10 o'clock. I'm not shifting over to the extended session. I'm just going to keep the morning session going, just as kind of a, yay, it's my birthday, woo. Now I have to make sure that it doesn't roll over the euro. That would be problematic because I've got a trade on the euro right now. So don't roll the euro yet, but everything else you can roll. If you've never done this before, just as a by the way, in your control center in NinjaTrader, go to Tools and then Database Management. And within Database Management, if there's anything to roll over, you'll see it pop up in the list here. So in this list, you'll notice there's a ton of crap in here because there's a lot of stuff rolling over. The only one that I don't want it to roll is the euro right now, because I still have the trade that we were talking about earlier active on that one. So I don't want that one to roll over. But all the other ones, that's good to go. So then we can do rollover. And yes, I'm sure I don't have any other things going on. And when you click update, it rolls everything for you. Might take a second. You'll notice the euro's still in the list because I didn't roll the euro. But now we are on the December contract on all of my charts, on all of my workspaces, except the euro. See? It's a beautiful thing about it. It does it all for you. Now, again, normally I wouldn't roll over in the middle of the day like that. I would wait until the end of the day, especially given that it's a Friday. But that weird volume there makes me nervous. I mean, we can see the volume is down here as well on the S&P. The new pricing is down at 44.90. But, little concerning. Now, when you do a rollover, your old drawing objects will remain, and they're going to be wrong because the prices are all different. So that is something to consider. Well, I barely had to take any risk on that. And given that it's rollover, I'm going to lock in a 3-to-1 actual risk on the euro and just let it go. I really don't care what it does after that. We've got the rollover, which I've got to take care of. And we're already beyond a 3-to-1. We're already at almost a 5-to-1 on the actual risk perspective. So, okay. I mean, because I only have one contract, is the only reason that I would put a stop up that close. If I had multiple contracts, then just exit one, you can good to go. I didn't want to take multiples on this. I took it with the single. So I've got to opt to do it a different way, and this would be the next way to do it. They'll probably pull back and take out my stop, and that's fine. It's at a 3-to-1. There you go. Congrats, euro. But now I can roll over the euro. So let's go over to database management again. Roll over the euro. Yes. There. S&P continuing to grind its way to the downside and really just slam on buyers who are trying to pick up that move. Got a nice bounce off that low. Worked out for a continuation move to the downside, at least, if you were shorting the top. Going with the trend, right? But, if you're trying to buy against the trend with all these warning signs, then they face some difficulties. With this continuation of the downside, there's candle gaps all over the place. This one's still open, by the way. So that candle gap objective is... Ooh, they almost got it. Right there. Candle gap objective. Let me redo it. Oops. So that's the latest candle gap objective. All of the other ones have been completed. See if they want to keep this thing trucking. They're right there. Kind of wishing I got more than just that one contract now. I got dodged on too. It's all good. The market giveth and the market taketh away. It's been a really good day either way. Nice little dip down towards settlement. Ooh, they didn't quite get it yet. 44.82. Giant bear bar to the downside. Wow. Candle gap objective is done. Although we're creating a new one now. So, you know, that said, that last candle gap objective is done. But if they do just go straight down, we've got another one, which is down here. I don't want to lose the last one yet, though. Way up there, jeez. Alright, this one's filling in a little more. We're getting some bullish response. We have a one-tick miss on the settlement fill. So just because I rolled over and I don't have it on this chart, this was the first short area. I don't know if it's worth the exact same values, but should have gone for a 3-to-1 apparently. Yeah, right there. So that was the first trade and the only trade so far. Ooh, let's do it this way. There we go. Market's still pushing to the downside. Open candle gap objective has closed in a little bit, but that puts it right there at 78.50. We've got sellers attempting to rotate down on the NASDAQ as well. And, I mean, honestly, I've got to say, there's probably a lot of bulls who bought into that and they're stuck. Yep, the euro's starting to pull back on itself. Ethereum losing the bottom. Starting to get a little push. What the heck? Oh, hang on. My bad. I didn't realize I had my another tab opened up. I've got Deficit's new song Death Prize open. That's what that's. I don't know if you could hear it through the microphone or not. It was kind of quiet. I swapped tabs and it popped up and started playing. I haven't heard it yet. I'm excited. Sellers still continuing to the downside. Overall, I mean, as far as things are concerned, looking at where we are going into the end of the week and kind of seeing how things have gone for the beginning of September here. Whoops. What? Where'd it go? Go down. What the heck? the numbers all out of whack? My NinjaTrader's acting really weird. It's 68608 is the average trade? What does that even mean? Oy vey, my NinjaTrader is an absolute train wreck right now. I was gonna look at the trade performance, but it's saying, like, instead of ratios, it's just giving some crazy numbers, like 7,000 reward versus risk. Like, I know I had some good trades, but I did not have a 7,000 to 1. I would very distinctly remember a 7,000 to 1. Let me reload Ninja real quick and see what's going on, because something... Yeah. Something's not right. Give me a second here. Everything is as I left it, at least. That's good. Now let's get connected real quick. Yeah, I tell you, today's been weird. You got the order flow just chucking volume in places that just show up when the market's not even trading there. We got some anomalies happening today. It's making me a bit nervous to continue putting risk on the table, I gotta say. Let's see here. Did that fix it? Do I still have a 7,000 to 1 that I missed? Oh, thank you, Origin. I appreciate it. You're also in September, the end of the month. That's when my son's birthday is. His is the 25th. I have no idea what's happening. Something's messed up. Oh. It's the euro, isn't it? Because the euro's still open. That's what it is. I'm just being stupid. Okay. So it was giving me funky numbers because the euro trade was still open. Gotcha. Okay, hang on one second. Now that I've pulled my head out of my butt, let me fix this real quick. Did that fix it? Yeah, there we go. That's better. That's better. Okay. Man, I would really remember that. 28th. Ah, cool. Starting to get into October. My son's birthday was supposed to be Halloween. He was born a month early. Side note, our favorite holiday on this planet Earth is Halloween. Absolute favorite. Yours is also the 20. What kind of small world, man? Jeez. Anyway, looking at the total number of trades, excluding the euro, because that makes my numbers look absolutely insane. We did have some scalps on the S&P, which is going to skew things, but we can see overall 37 total trades, 75.68% accuracy. Average trade is a 0.95 1-to-1. So if you were looking at the math to ensure that the math is appropriate, oops, go over here and say 75.68 minus 100. So 24.32 times, we're losing 27. And the other 75.68 times, making 26. Obviously, that math works out pretty favorably. It's a pretty good week. So. Not bad. Some nice swing trades in there. Some nice pickups off of some huge dip zones. I mean, I can't argue. It's been a great week. Market getting hung up on the earlier candle gap objective. Still has the second one open. I wonder if that's a thing. Like, are traders drawn to like if they're born in September? is that a thing? September, October? Are we later in the year? Probably not. Market slowing down a little bit. I mean, looking at the bigger picture here on the NASDAQ, it's gone nowhere, right? I mean, it made a new high, tried making a new low, failed, tried making a new high, failed, and now we're back in the middle. We're in a wedge. That's all it's done. So, here it sits. The euro did take me out on the earlier long, and then I rolled over to the December contract. So that one is all done. The S&P is looking vicious right now. Jeez. The S&P, man, that thing feels like it's ready to take some names. We got the Doji closing above. I mean, this is some serious bearishness, and they're not even letting up. They broke above a previous candle's high once, which is where we sold earlier. Hasn't done it again. Not really seeing any candle gapping, although there is two, now that I say that. There's one down and one up. Not really anything else, though. They still haven't taken the POC down there. The last POC is back at 44.90. That's crazy. How long they've been trading here and they still haven't taken it. Wow. Also, fun fact: Paul Tudor Jones be September 28th. Imagine the birthday. Yeah, that's crazy. Just the amount of coincidences all in one place, you know? I don't believe in coincidences. I don't believe in coincidences. I don't know why you're all here, and maybe I'm losing my mind. Alright, things are slowing down quite a bit, so if you have any questions or anything that you need covered, feel free to get those in. It's perfect time to do it. And we'll get those taken care of. Oh my god, there was a fuzzy inside my headset. I thought it was a spider, and I damn near had a heart attack. Whoo! Holy moly! I'm not arachnophobic or anything like that, but just knowing that there would have been a spider sitting next to my ear for... oh boy. Just saw the light for a second. Filling in the gap a little bit, which means that lower side objective CGO, the candle gap objective, is getting filled in a little bit more. Where's that? Well, it was here, so it'd be from there. Ooh, they're starting to create a negative gap. If it goes much further up, it's going to invalidate it. Yeah, the spider wants to wish me a happy birthday, exactly. Thank you, I appreciate it. Have a good one. Hopefully you all, if you're ducking out a little bit early, hopefully you all have had a fantastic week of trading. It's been solid so far. If you're going to keep trading, just understand the risks. Fridays typically are, historically, Fridays and Mondays tend to be the biggest days, both up and down. Given the way that this day started, that would make me kind of question it a little bit, you know? Not really. No, not really. Thank you. Not really any big plans for the birthday. No, my kids want to bring me bowling, and I would love to go bowling. I haven't gone bowling in years, and I think the kids would absolutely love it, and I enjoy it. So, plus, my entire family, kids included, incredibly competitive. So we'll probably have little challenges and tournaments and stuff, and oh yeah, it'll be fun. Otherwise, I don't know. Maybe go. It depends on the weather, I guess. But I'd like to go for like a nature hike or something, while the weather's still nice before it turns to whitey, snowy. Ugh. I hate the whiteout snow. Ugh, I'm not looking forward to it at all. Not here yet. Not here yet. I can look outside. I can still see grass. The leaves aren't even changing colors yet. We're good. Oh, we love Phase 10. That is such a fun game. I appreciate you recommending it, though, because if I hadn't heard about it, my life would be incomplete without it. That's a really good one. It definitely. We've been trying to go out and find. We love those little quick games that, you know, they fit into like a small little card box, basically, but not a car game or anything like that. But what's a game that I'm thinking of? Like Love Letter, but for kids. Smaller games like that. We love those because they're usually pretty quick, which is our kids' attention span. And, you know, when they're done, good enough. I tell you what, my son loves Mancala. And he is vicious at it. Just slays and lays waste to people in his way in Mancala. It's unbelievable. Ruthless. I love it. Taught him well. He will let his sister win on occasion, but not very frequently. Thank you. I appreciate the birthday wishes. All right. Well, I'm not seeing any other questions coming in, and to be totally honest, I don't really want to put any more risk on the table. It looks like if I had to just throw caution to the wind and say, you know what, I'm going to throw a trade on and see what happens until next week, it looks like the market, if we scroll over here and look at the bigger picture, is ready to take a dump down to likely a previous zone of support, 4470s. I say dump because that's still, you know, a good 15 points away for the S&P. That's pretty hefty yet. But if that doesn't hold up and they don't hold that support, the next thing isn't until almost 44.50. And now we're starting to look like 30 points out. If that doesn't hold, then we've got problems. So this could run away real fast. We'll see. Either way, enjoy the weekend. I hope you all had a fantastic week of trading. As per the usual, if you have any questions that I may have missed, or if you have a question that requires a more detailed response, shoot me an email, jhb@ssftg.com. Have a great weekend, though. Like we say every time going into the weekend, make sure to get away, right? Do something fun, get away from the markets, and take a break. We make more decisions in a day than most people make in a week. We've got to give our brains some rest. We've got to do something else so we can come back on Monday ready to rock and roll. So have a great weekend, and we will see you all back on Monday, all right? We'll talk to y'all later. Thanks.